Hey everyone, it's Paul, and today I have an amazing new video for you. Truly amazing. A kind of stock and setup that has generated big gains for me personally. And when I used to be at Banyan Hill, we had some big, massive winners, and they came quickly. Now, hey, straight up, I'm going to put this right into the title. Number one, risky biotech stock right now. It's risky. I'm gonna give you a little bit of why and how and when, etc. But hey, let's get to the disclaimer, which is a general thing about risk in some level. First of all, this YouTube video, anything that I put out on Twitter, Substack, Instagram, Facebook, any content is not investment advice, has not taken into account your personal financial situation in any way, shape, or form. That is your responsibility. Next, past performance does not equal future results. And I definitely cite some past performance here. And so it doesn't mean that you're guaranteed some future major profit. There's always risk. Errors, mistakes, oversights, they happen because I'm a human being and our team are also filled with human beings. Capital loss is a likely outcome. Whenever you take on trading, speculating, investing, capital loss is a potential outcome, and you have to consider that in your decision making. Last, I, the owners, contractors, employees, and associates of ATG Digital Media, which is my company, we own, trade, transact in the investments that are mentioned in this YouTube video and all of our content. So fair warning and disclaimer. Next up, I'll plug quickly for atgdigital.media, which is my company. We have subscriptions for stocks, crypto, option trades. The base subscription, which is for a multi-cap and includes some crypto, starts at $9.99 per month. So check us out at atgdigital.media. And if you want to get a taste of what these investments, these trades, these speculations look like, in addition to watching this YouTube channel, you can also check me out on paulmampilli.substack.com, and that is completely free. And write about macro, and then we also actually pretty much every day have a stock that's mentioned. Sometimes when I write, I don't write about the stocks. I write about sort of like the market and macro. But Dan and Dean, two of my amazing analysts, they write about stocks every single time. So subscribe to the Substack if you want a taste of what our subscriptions provide you. All right. Before I get into the actual stock, I want to give you a little bit of education about biotech stocks, because biotech stocks are something that I have covered for 25 years. And I can tell you they are a very special animal. They are very unusual, very different. They drive off events, and they're driven off intellectual property. And so many of them don't have sort of like things that you can go look at with regular stocks, like, ongoing sales and things like that. Instead, biotech stocks are kind of like, there's like two or three categories of it. There's companies that sort of have like drugs that they're planning to bring into the clinic. And so once they get there, then they get to be clinical stage biotechs. In other words, they've gotten permission from the FDA, which is the arm of the government that approves drugs, to test these drugs in people. So that's called a clinical stage biotech or a clinical stage drug. Now, there's three levels of testing. Phase 1 testing, which is essentially about safety. Phase 2 testing, which is essentially about working out the dosage, assuming that you got through phase 1. And then phase 3 testing is where you go to really see, does this drug work in a large enough population that the FDA agrees is going to give an actual signal to doctors and the healthcare system that this drug is something that can be approved for and prescribed. So I mentioned biotech companies are a special animal, because if you're just a company that has no drug that's been approved, you have no ongoing sales, which means that to operate day to day, you are dependent on investors to keep providing you money, which is why biotech companies are constantly issuing stock. And it's why investment banks love biotech companies, because it generates fees for them. Biotech companies need money all the time, and investment banks absolutely love them. And then they're super risky because the vast majority of the value of any biotech company comes from one drug, which is in either phase 2 or phase 3 testing, which are the later forms of testing. And if that fails, well, you'll see, like, sometimes if you go look at headlines or you go look at, what's moving any given day, it'll be some biotech company that's down 50% or sometimes up 50% or 70% because some clinical stage result has gone, their way. So if it goes against them, you see big down volatility. If it goes for them, sometimes you see big up volatility. So bottom line, biotech stocks, risky, yeah. Look this up, and I've known it was a very low number. The odds of getting FDA approval are crazy low, which arguably kind of makes sense, being that we don't want drugs that don't work or don't have a likelihood of working being approved. We don't want unsafe drugs. We don't want drugs with a lot of side effects that can maybe make you worse. So odds of getting FDA approval fairly low. Only 10 to 20% of all drugs ever get approval. So you look at the vast universe of drugs that are out there. Yeah, it's a very small number that ever get to FDA approval. And the thing is that that's not the last step. Like, once you're approved, you have to find a market for this drug. You have to persuade providers, payers, that your drug is worth paying for, and for people to prescribe it. So there's that last hurdle, which has to be a commercial success. But I can say this, that when these biotech stocks hit, it's big. When I was at Banyan Hill, I just took these 3. We had more than these. And past performance does not guarantee future results, but we had some big hits. And these came fairly quickly, like in 12 to 24 months. Like Immunomedics got bought 432%. Arcule got bought 450%. Loxo Oncology got bought 131%. And the big biotech gains, at least the short-term gains, I mean, there's ones that are longer term that play out, like the large companies. Like if you'd bought Amgen very early on and just held on, well, Amgen's become like a very, very large company over time. So they never sold themselves to anybody else. They just kept developing their own drugs. And long term, you can make thousands of percent, tens of thousands of percent. But we're looking for small biotech companies where the big gains come from big pharmaceutical companies, big biotech companies like Amgen, big pharmaceutical companies like Merck, Pfizer, GlaxoSmithKline, et cetera, coming up and gobbling these small ones up. And they generally come to acquire these companies for 2 things, in my experience. The number one preference is to buy drugs that can sell big amounts. Because remember, a drug is a little bit like once a drug is prescribed and it works in a patient, the patient's in all likelihood going to keep taking it and taking it. So it's it has an enormous lifetime value. And drug companies can very easily know, from having operated these kinds of assets for a long period of time, they can gauge, like, okay, if I buy this company and they have this drug and it's selling whatever, its peak sales can be $1 billion when I include price increases, and I model this out over 7 years, 10 years, 12 years, it's worth $18 billion. So for them to pay a premium of 200 or 300, 400%, they know long-term it's going to more than pay back. So they can afford to pay up to buy these companies. And it's a good deal often for the investors who have dealt with massive volatility, massive risk, the odds being against them. So it's a good payoff them. And then every once in a while, companies also, big companies buy smaller companies for their technology, although that is less common, which makes sense, which is that technology is pure intellectual property, and I can tell you, most pharmaceutical and big biotech companies, they want to acquire companies that generate revenue and where the benefit is just very, very clear. Now, if you go look in 2023, there have been 11 deals already for, I added that up, in the from all of the things that you've seen in that slide there, $63.5 billion almost. And the average premium is between 16% to 273%, but that really actually doesn't do justice, because if you'll see the note that goes with that chart, it says it's only counting it from the day before the deal is announced. The truth is that the market gets wind of like these things, and there's rumors around, and people come and start bidding things up. So the actual gain can be substantially larger than 16%, and even greater than 273%. I mean, like I said, biotech companies, they know very, very well what the lifetime value of a drug is, and they are willing to pay up because they know that they can generate multiple folds of it. And there's also, lots of additional benefits of, if they can sell one drug, sometimes they can include a second drug that allows them to sell a second drug into that same market. So a lot of benefits for them. All right. So getting right down to it, in my opinion, the next sort of like big drug company that could be acquired is a stock. Sorry for the messy handwriting. There was a lot to put together. I mean, so IDYA. I just want to make sure that that's right, because man, this really looks like chicken scrawl, doctor's handwriting. IDYA, which is a company called Idea, spelled with a Y at the end. Idea Biosciences. So it's a $21 stock representing a $1.21 billion market capitalization company. All right. So why Idea? Well, we're going to put up a whole bunch of very rapid news releases, and it's a little bit technical, but I'm going to just distill it down to simple things. So on April 23rd, they released study results for a drug that they own called, oh my God, these drugs are called like crazy things, as you can see, dasavertib. And it's in combination with a second drug called crizotinib. If I get these pronunciations wrong, I mean, hey, you guys go for it, but whatever it is, these drug names are crazy. But drug names are relevant. What really caught my attention are these numbers, which are mind-blowing. So remember, I've covered biotechnology for a long time. I started like in like when the human genome was like first sequenced. That was the first big biotech boom that I experienced. So I've been in this game for a while, and I can tell you, 45% overall response rate, which, to make it simple, it means 1 out of every 2 people approximately showed some sign of that this drug was affecting them. That's a big deal. I can tell you that for the most part, those numbers are really low. I mean, and this drug, which is for something also which is, very difficult to pronounce, uveal metastatic cancer. I'm going to show you what the generalized historic numbers are. They're a lot less than that, but 45% just in general is a crazy high number. It means like a lot of people, when this combination of drugs is given to them, they're like, something's going on in their body, it's affecting them. And then on top of that, it's a positive response. Like 90% of the people that are showing a response are showing that their disease is coming under control. And it's leading to people leading what's called, progression-free survival, which is, there's a lot of technical jargon terms in terms of like biotechnology and clinical testing. Don't get too hung up on it. It's just like these numbers are very big, and 7 months to increase life. If that's the average number, it means that some number of people are seeing much, much, much better results than that. And that's also very big. The last thing that's noted, and you'll see it in that press release, is 100% of the people are seeing their tumor shrink. And I can also tell you to see this that early, yeah, that's very, 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 very positive. And those are some of the things that I saw when we recommended Immunomedics and we recommended Arcule. They had these kind of like, really eye-popping numbers. So the company, when it showed those releases, they said that historically, like the objective response rate, like in this, indication or disease is like 0 to 5%. We're seeing 45%. I mean, big. I mean, these are difficult to treat conditions. And the folks who have it, I mean, this is obviously a critical medical need. And the progression-free survival is 2 to 3 months, but 7 months is more than double. So that's a big deal. Just to give all of you context. All right, so what is going on with IDYA stock? Well, they released the news, on the study in April, and you'll see the stock popped up. And generally speaking, I'm a little bit wary of stocks that are popped up because there is this market, I don't know, wisdom that says, you shouldn't buy into gaps. But, I've also seen plenty of gaps that, especially where there's been some actual big news that actually changes the character of the company, which in my opinion, and remember this video, opinion, not advice. In my opinion, this study changes the character of the company. It takes it from being something that could have been a good stock, etc., to where like it's the market saying like, hey, those results look legit, look like a big deal, and change the character of this company. So, and we're getting some like indication that the market may be right about this, which is that the FDA has agreed as a result of seeing those results. And the FDA, remember, looks at results for these conditions, these diseases, these indications all the time. So, I mean, like, they don't give this away for free. They're agreeing to accelerated approval based on progression-free survival. And just, say that they don't give that to everybody. Progression-free survival is sort of like a second order condition, if you will, or requirement. They don't usually give that to people. So that's a big deal. It makes the likelihood of their next set of clinical tests, which they need to do to get approval, much higher likelihood of success as a result of it. And then more recently, Pfizer, which is the maker of crizotinib, which is the second drug that is in this study, they came out and said like, hey, we're going to support you. We're going to, make sure that you get the drug that you need. In other words, they're cooperating with IDEA. And that's obviously a signal, which is like Pfizer's like, damn, that's hot, like 45% and 90% of people responding, like, and you're using one of our drugs. Of course, we're going to support you. This is good for us because obviously, if this drug combination gets approved, it's going to be a big seller. So that leads you, well, what could happen? Well, what are the alternatives? Well, it could be that maybe IDEA, just stays independent. And they've got to do one more trial, which is called like a confirmatory registration trial to make sure that the results that they're seeing in this study are confirmed. And maybe they'll just stay independent and then launch the drug. And being that it's a critical need, it'll be a fast launch. They'll start to generate, let's say, I don't know, hundreds of millions of dollars in sales. The stock will go up based on that, based on, again, what it goes through. The other possibility is that a big company, hint, 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 Pfizer, comes to buy IDEA before all of that happens. Why? Because once it happens, well, the price is going to be even higher. So if you're willing to take the risk today, then the price would be lower. So I don't know, what would they be willing to pay today? Well, if this drug, dasavertib, in combination with crizotinib, has been, as the biotech analysts would say, de-risked, which means this is a very high possibility of being a big drug. I mean, $1 billion, maybe $500 million, maybe 800 million. Well, what's the lifetime value of that? Well, it's definitely in the billions and billions of dollars. So, I mean, where is IDEA Biosciences today? So, like I said, $21 stock, $1.21 billion market cap. They have cash of 565 million. They just recently did a deal for $201 million, which many sort of like retail investors hate to see this, but truthfully, it actually strengthens IDEA's position. It gives them more leverage to negotiate because now they don't have to be desperate and be like, oh, we need money, come and buy us. And where, a bigger company say, you need money and you need to sell to us. So they got like, more than $500 million sitting in cash. They got plenty of money, which is generally a good thing. It allows them to negotiate from strength. And also gives them money to actually run the trial in a good way to make sure that they've done everything right to get FDA approval, which is the big thing that they need to get. All right, what are the risks here? Well, the risks are that despite the results that I cited, the drug fails. I mean, that's happened before, which is that, you can see really good results, and then somehow when they go to do the next set of trials, it turns out that it doesn't work. It doesn't confirm the previous results, and when that happens, the stock plummets. Just want to be 100% clear. The other one is that it just takes longer. For whatever reason, they can't get enough people to register for the trial. It takes forever. The stock market generally dislikes delays, and the stock goes down as a result. Or else there's just no acquisition comes. And so, I've told you about all these things, and no Pfizer shows up, no Merck shows up, nobody shows up, nobody kind of cares. And so the whole thing just fizzles out. That's obviously a risk. But if you ask me based on my experience, those kinds of numbers, yeah, I mean, you don't see them too often. And when you do see them, most times, that market reaction, that market enthusiasm of pushing the price higher indicates that this thing is for real. And many times it suggests that a bigger company is going to look at this small company and say, this has a really good chance of becoming a blockbuster drug, which is a drug that will sell more than $1 billion worth per year. And that's really what these big companies want. They want blockbuster drugs. And this has the kinds of results that suggest that it could be a blockbuster drug. And if that is right, then in my opinion, not investment advice, IDEA Biosciences days as an independent company are probably limited. Somewhere in the next, I don't know, maybe it's 3 months, maybe it's 6 months, maybe it's 1 year, someone comes and buys it out. If that doesn't happen, nonetheless, they're in control of an incredibly valuable asset that they themselves could develop. Who knows which way it will go? There's only one way to find out, right? All right. Before I say thank you, I want to mention again, check us out, atgdigital.media. Check me out, or check us out again at my Substack, paulmampoli.substack.com. And if you don't want to do any of that, well, give us a thumbs up, subscribe to the channel, come back next week. This is Paul saying